Someone just unmute and see if they can hear me. Okay. Thank you. Good evening, everyone. Um, we'll be starting very, very soon. Some people are reaching out to me that they didn't get their email yet, in which I'm trying to send them the email personally. So we'll be starting very soon. Thank you. So while we're waiting for it, I just want us to check the recent update. I know we've been hearing about um there is this issue of the gazetted copy and the one um that was adopted by the House. So there is a recent update from Tawe Idele concerning it, in which he says the tax reform will still come up in January, whereas they will still be working with the House of Assembly to ensure that they rectify whatever issues they have. So while I'm attending to them, I'll just play the video so we can just watch on the recent news that he talked about recently.
Service Establishment Act and the Joint Revenue Service Establishment Act. As you're already aware, there are 4 of those laws, and 2 of them have already commenced, and that's the Nigerian Revenue Service Establishment Act and the Joint Revenue Service Establishment Act commenced on the 26th of June 2025. The remaining 2 laws, that's the Nigerian Tax Act and the Nigerian Tax Administration Act, are scheduled to commence on the 1st of January 2026. We welcome the statement by the National Assembly House of Representatives Committee today on the findings and the work around the allegations about alteration. The federal government is committed to working with the National Assembly if and when any action is required. And therefore, they plan to commence the new law, the 2 remaining new laws on the 1st of January 2026. We go ahead as planned on schedule because these reforms are designed to provide relief to the Nigerian people. Bottom 98% of workers will see either no PAYE tax or lower taxes to be paid. Small businesses, 97% of them will be exempted from corporate income tax, VAT, withholding tax, and large businesses will see a drop in the taxes that they pay. The whole idea being to try and promote economic growth, inclusivity, as well as shared prosperity for our people. So we're actually excited at the progress we're making, and we're looking forward to January 1st, 2026. As you're already aware, there are 4 of those laws, and 2 of them have already commenced, and that's the Nigerian Revenue Service Establishment Act and the Joint Revenue Service Establishment Act commenced on the 26th of June 2025. The remaining 2 laws, that's the Nigerian Tax Act and the Nigerian Tax Administration Act, are scheduled to commence on the 1st of January 2026. We welcome the statement by the National Assembly House of Representatives Committee today on the findings and the work around the allegations about alteration. The federal government is committed to working with the National Assembly if and when any action is required. And therefore, they plan to commence the new law, the two remaining new laws on the 1st of January 2026. We go ahead as planned on schedule because these reforms are designed to provide relief to the Nigerian people. Bottom 98% of workers will see either no PAYE tax or lower taxes to be paid. Small businesses, 97% of them will be exempted from corporate income tax, VAT, withholding tax, and large businesses will see a drop in the taxes that they pay. The whole idea being to try and promote economic growth, inclusivity, as well as shared prosperity for our people. So we're actually excited at the progress we're making, and we're looking forward to January 1st, 2026. As you're already aware,
Okay, so I'm still reaching out to those people. Some of them are still having issues with their link. So please exercise patience so that everybody can get the best of this. So that everybody can get the best of this. Please kindly exercise patience so that everybody can get the best. Thank you. Okay, sorry. I think anyone that is not here now, um, I've addressed almost everybody. So anybody that is not here now, it won't be my fault because currently I'm just seeing some people that are just registering now, and I have to send them the link, which I've already done to the best of my knowledge. So we'll be starting now. We'll be starting now, and it's going to be a very interesting session. It's going to take some of our time, and we are going to go through um, a lot of a lot of things. We are going to go through a lot of things. So also, this session is going to be recorded and it will be uploaded. The link will be sent to us via email. Also, I would be opening up the I'll be turning on Q&A, in which as we proceed, you can drop your questions. Also, I have the questions from the registration that 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 I will also address once I'm done with the presentation. So also this session I will be transcribing it. It's already recorded, so there will also be transcription alongside that that will work with it so that we can get the transcription also, which would be sent after this particular session. So we'll be going through extensively through the new four acts that has been enacted. Two is already in place. Two is coming to be in place in January. It's going to be in place in January. So um, that will be it. So we are going into the session now. Thank you. So please, can everybody confirm that they can see my slide?
Yes, we can see the slide.
Okay. Okay. Sorry. I think I'm presenting the wrong one. Okay. So can you see what I'm presenting? Okay, good. So we are basically talking about this policy, and everybody actually knows what taxation is. The country, especially Nigeria, we depend on taxation to fund our entire budget. Even though if we look at the current budget that was submitted, I think last week or last 2 weeks, you will see that we are still running at a deficit of what we are going to spend. Our expenditure is far more higher than the income. Yeah, please let everyone mute. Please let everyone mute.
Why were there yellow bag?
Okay, so Okay. So we know taxation will depend on it to fund everything we need. And why do we need to tax people as a country? Is because we need it to fund our public service. We need it for economic stabilization, wealth redistribution, and then regulation of behaviors. For instance, one of the major things that will regulate people's behavior is the new VAT and even the taxation on capital gain. And then of all type taxes can be classified either under direct tax or indirect tax. So direct taxes are taxes that affect us basically like the payee, the personal income tax, the company income tax, the why taxes that are indirect are taxes that affect us directly, like the So sorry, I don't know. You should be able to see my slide back now. So okay. So the why indirect taxes are taxes that um once they pay it, the company pays it, but they can push it to the consumer. It's not the person that paid it that bears the particular tax. This falls in things like the excise duties and value added tax, whereby if um if the company buys something, they can push the VAT by adding it to their cost and then selling at a profit in which the consumer also will buy. By that way, the company has gotten back the tax, whereas it's the final consumer that that bears the full cost. So that's what we call the indirect tax. They're taxing the consumers indirectly. And then we also have the tax system in which we have the progressive, we have the progressive, we have the regressive and the proportional. So Nigeria virtually uses the progressive. That's why we have the tax rate zero and it continues higher. So they tax you more as you earn more. Why proportional is just saying 10% of tax irrespective. So the person that earns 100,000 pays 10% of their tax. Same thing, the person that earns a million naira monthly, that's proportional. Is the same thing. Whereas regressive tax is whereby they tax the poor more and they tax the rich less. So let's say, for instance, the highest tax under the new tax law is 25%. That's the personal income tax, is 25%. Now, they will tax the poor. Instead of the first 800 to be 0%, the first 800 would have been 25%, and down like that to 0%. That's a regressive tax system. But I don't think there's any country that actually uses the regressive tax system anymore. So, what do we aim to gain in this webinar is to ensure everyone is appropriately informed, and then ensure that we get the strategies to utilize this tax law appropriately so that we can um, use it to our benefit. This tax law has come to stay. Is how do we get the strategies to use it to our benefit, and then also that everyone can teach others about the tax. So when you are in your gatherings, you are conversing with people, and then you can tell them, "Oh, this is what the tax law actually says, not this and that." So now we are going to consider five things this evening. We are going to consider the why these reforms. Then we are going to consider the four new acts that is under this tax reform, which is the Joint Revenue Board Act, the National Nigerian Revenue Service Act, and the Nigerian Administration Act, and the Nigerian Tax Act. So two of these acts is already on board, which is the JRB and the NRS. That is why we can see the communique from the JRB, and then we can see the transition already going on within the NRS. So then the NTAA, which is the Nigerian Tax Administration Act, and the Nigerian Tax Act, those ones are coming up in January 1st. They are coming to be in January 1st. So, number one, why the reforms? So, one of the major systems that has been in the Nigerian tax system is the multiplicity of taxes and multiple revenue generating agencies. We can see this. Sorry, can you see my screen now? So these multiple taxes has existed where you are taxed in multiple times. Then there's the scenario of not being able to get refunds. For instance, your VAT, if you pay VAT, you should be able to get some VAT refunds, and then at cost of the revenue administration. That's on the part of the government. There's poor accountability also on how they are using the tax revenue, which is one of the main activities of the fiscal reform and policy committee, and then growing tax expenditure. So this brought about why they brought about the Presidential Fiscal Reform and Tax Reform, Fiscal Policy and Tax Reform Committee, so that they can harmonize all these multiple taxes. We have more than 50 taxes in the country from across all board, the federal, the states, the local government. They are just too much. There are a lot of taxes. So they are to unify revenue collection also. and modify simplification of the tax system. They are also to bring in technology for data intelligence and all those things. Now, what are the common misconceptions that we've seen in regards this um, tax reform? They've said the government introducing new taxes. Based on reading this tax law, there's actually no new tax that was introduced. All the taxes actually um, exist before. They just made some particular changes to it. Then your bank account will be debited. I think on this, the JRB, they've come out multiple times to say your bank account will not be debited. Even though I think one of the issue why your banks have been sending these messages is there is a particular section of the law that says the bank must get your tax ID, of which has existed in the past. I think for those people that have opened one bank account or the other from traditional banks, actually, over the past, I think 2-3 years, you would have seen where they put tax ID there. So it has actually existed. Then I think small businesses will enjoy more. States will be more fairly treated, I think, especially due to this new sharing ratio for the VAT and other things. And then states will be more fairly treated. Then tax reform isn't about grabbing your money. Actually, this tax reform brought about something that we will talk about when we get to the Nigerian Tax Act. Actually, we'll talk about it when we get to the Nigerian Tax Act, because one of the main things that it brings about is they are not more taxing your income. They are now taxing in your profit. Your profit. They are no more taxing your capital. They are taxing your profit. And then capital gain tax will be charged on capital market investment. No, it applies to all their new exemptions. I don't think it's in this my slide, but I would expand the slide before I send it. So there are new exemptions to the capital gain tax, which I will specifically talk on, which everybody can actually benefit in. And then minimum wage earners will pay payee. No, minimum wage earners will not pay any payee, because there's a provision in the tax law that exempts all minimum wage earners. Anybody earning the minimum wage will be practically exempted, and gifts will not be taxed, and the likes. Of course, pension has always been excluded from tax right from time. And Nigerians in diaspora, that will be on the talks of residency. When we are talking about residency of a person, that's when we depend whether you'll be taxed or you will not be taxed. So these new 4 acts, they repealed 11 of these tax. You can go through it as when you get the slides personally, and then it amended some of these other 12 new tax. So what it did now is, instead of having these separate acts differently, these 4 tax bring them into one, in together. Before, we have the PIT, we have the CIT, we have all of them differently, but now it has brought it into one act, which regulates practically all of them. So now, these are the new tax laws that came into the Joint Revenue Board, Nigerian Revenue Service, Nigerian Tax Administration, and Nigerian Tax Act. So like I said earlier, 2 has been effective from June when it was signed, and then the remaining 2 will be effective from 1st of January. Now, what's our agenda to the Joint Revenue Board Act? So what is the main objective of this act? Is about harmonizing the revenue administration across federal and state lines. Before, the FRS, that's the Federal Inland Revenue Service, stands on its own. The state stands on its own, and they are just taxing people and everything. But now what it does is, okay, there's this, before there exists actually the Joint Tax Board, the JTB, in which has been repealed under this Joint Revenue Board, and they were the ones trying to harmonize, but it wasn't really working. Because let me give an instance. Um, if you operate a restaurant in Lagos, you'll be paying what we call the tax on food and the tax on drinks, whereas you are exempted from VAT. Whereas every other state, once you are operating a restaurant, you are expected to pay um, VAT on your food item. But now they are charging you VAT on the food and on the drinks. There's also the consumption tax and every all those things. Now, so another thing it brings about is efficient mechanism of the tax dispute, and then it protects taxpayer rights. So under this act, there are three major things you just have to understand there. Number one is it brought about the Joint Revenue Board, which replaces the Joint Tax Board. Number two is it brings the Tax Appeal Tribunal. This Tax Appeal Tribunal has existed before, but it wasn't independent because it was under the FIRS Establishment Act. Now, it brings it on its own practically. So another one is it establishes the office of the tax ombudsman. So that particular one is new. It wasn't existent before, and it's one of the loveliest initiatives under this JRB Act. So number one, the establishment of the Joint Revenue Board. So this act actually establishes the Joint Revenue Board. It repeals the Joint Tax Board. Not that it's just practically moving it into the Joint Revenue Board. So it's now a corporate body with perpetual succession, and it can acquire old properties. So the head office of the board will be in the FCT actually, but the operation will cover every single state and local government. So what composes this JRB? Of course, the executive chairman of the Nigerian Revenue Service, and then the chairman of all the states' internal revenue service, and then the FCTIRS, and of course the ex-official members of the Ministry of Finance and the likes. They are the ones that are coming together to form this board. Now, what's their main duty? Is to ensure the integration and maintenance of the tax identification number. So, for instance, if you go online, you search the Joint Tax Board, or you say you want to get a new tax ID or thing, you want to get your thing either for a company or an individual, you can get it through the JTB site. I don't know if they've changed it to JRB now, but you could have gotten it through the JTB without visiting any tax office. And to get your tax identification number is free. You are not expected to pay anybody to get your tax identification number. So they are to ensure integration and maintenance of this thing database, so that both from the FRS and the state internal revenues, they are all harmonized, and then they are to do resolution of dispute between tax authorities, where the federal is having issues with state, where the state is having issues with local government and the likes. And then they are also the one in charge of double taxation, because double taxation actually exists for people working within two countries and the likes, where they tax you in the country where you're working, and then they tax you in Nigeria also, probably because your residency lies in Nigeria. And then their also function is to harmonize all the taxes, levies, and everything. I think if you've seen the communique of the JRB, I sent it to those that are registered earlier. If you've read through it, you will see where they talked about canceling all these excessive taxes. For instance, if you're based in Lagos, you will see that almost every bus stop, they collect money from all these bus drivers. So what they are trying to do now is cancel all those excessive taxes. We are bringing it into one and ensuring the burden on people is less. Also, they are to give advisory role. They advise the minister on tax and the likes, on any regulation that should come out, because we'll most likely still have another session in January or February when the regulations that we are expecting from the Minister of Finance comes out, because some regulations are expected to come out to activate some parts of the Nigerian Tax Act. Also, they are to work on research and collection of data. Now, these are basically the differences. It repeals some of the laws and brings in new one. It covers all the revenue, administration, and everything. Now, establishment of the tax appeal tribunal. This is the second main thing under the Joint Revenue Board Act that we see. So it gives the tax appeal tribunal dispute under to jurisdiction. They are like a court. The tax appeal tribunal is like a court. You go to, I have issue. They are telling me to pay 1 million naira as tax, whereas my tax is expected to be 750,000. I don't know why they are adding 250,000 to it. You go to the tribunal and you plead your case. The commissioners and everybody in charge of the tribunal will hear your case, and they will give a ruling. So any dispute arising from the Nigerian Tax Act, from the Nigerian Tax Administration, and any federal and state tax laws that is given, they have jurisdiction to sit over it. And then the tribunal will be in different zones as determined by the minister. The minister will determine how many zones. And so this tribunal will have 5 tax appeal commissioners per zone. Each zone will have 5 tax appeal commissioners, and it will be each zone will be headed by a chairman, which has a very relevant tax experience, and then they will serve. Each of these commissioners will serve 3 years. So another thing that is important to note in this tax appeal tribunal is they are now funded directly from the National Assembly appropriation, which means they are no more funded under the FIRS, which is now the Nigerian Revenue Service. So they can now operate independently and not be influenced by the FIRS themselves. So if you are going to them as the citizen or as companies or as individuals, we can now have peace of mind that, okay, yes, now these people, they are independent. They will give us the best judgment based on the law. So now, what is the power? They have the power to make rules that regulate its own procedures, how they make how the procedures of the tribunal will go. They have the power to make those rules. Then, of course, they have the power, like normal court, to enforce the attendance of anybody that is needed, either the government officials or the people that have case. Because in the tax appeal tribunal, not the citizens alone is not only the one that can bring cases to them. Even your state internal revenue service can come up and say, okay, you don't want to pay, we'll take it to the tax appeal tribunal to come and do your case. And of course, whatever the ruling is, if you are guilty, of course, you will be asked to pay. Then also they are to expect to receive evidence of whatever you are bringing before them and the likes. Now, what's their procedure? When an assessment is given to you. So an assessment in tax is basically when a letter or an email is sent to you from your relevant tax office that, okay, probably best of judgment. I think I saw a best of judgment recently. So best of judgment, probably a best of judgment that, okay, we believe that this year your total income was 10 million naira and your expenses was 7 million naira. So we know you made a profit of 3 million naira. We are expecting you to come, and probably as an individual, we're expecting you to come and pay your tax on that 3 million naira using the tax schedule. So once you receive that assessment and you are not comfortable with the assessment, there are 2 things you can do. You can speak with the tax officer in charge of that person or the company. Why are you giving us this assessment? And resolve it amicably, probably by providing the evidence. Oh, no, we didn't make 10 million. We even ran at a loss, and this and this and that. You can submit your evidence, and then there will be a review from the tax person who will give you another assessment. But if you don't want to go through that, which I believe that's the best first instance scenario, is you can write straight to the tax appeal tribunal that why are they taxing me on this within 30 days of receiving the assessment. So if you receive the assessment on the 1st of December, you have to write to the tax appeal tribunal within 30 days so that the tribunal can acknowledge they've received, and then they will start the case on the issue you have presented before them. And then also the tribunal will now give you another 30 days. Once they've received, they'll give you a settlement window. So this settlement window is whereby you go to the tax officer, like I said, and resolve the issue. If you people can work it out and you're comfortable with the result, your case with the tribunal is over. But if you cannot work it out, then they will be called to the tribunal to come and present your case, both the tax office and you as a company or as an individual. You come and present your case with evidence in which the tribunal will now sit down and give a ruling. Another thing to note about this tax appeal tribunal is you can be represented either by lawyers that are versed in tax, either by professional accountants, or by tax practitioners. And by tax practitioners, they must have the license to practice as a tax practitioner from the Chartered Institute of Taxation of Nigeria. Then another thing is when the tax appeal tribunal now gives their case, and let's say the case is not in your favor or is not in the favor of the government or you can now appeal to a federal high court. And then you have to give a written notice to the secretary of the tax appeal tribunal within 30 days. You have to give that written notice to the tax appeal tribunal, to the secretary of the tax appeal tribunal. And then also there are other means from the federal high court. If you are not happy with it, you can go to the appeal court higher like that. Then, so what differences can we see? Before it was in the FRS Establishment Act, now it has its own independent statutory footing. Before, because it is under the FRS, it was only federal cases that you can take to them. But now, both federal and state tax disputes can be taken to them. So if you have issues with your state internal revenue service, you can now take the issue to the tax appeal tribunal. And then also you can read more. I sent the gazetted copy, although I know they are working to reconcile with the National Assembly copy. Once that one is out, I will also send it. But after the meeting, I will send the gazetted copy to those that didn't get the initial email. You can read extensively on the second schedule to see how the procedural rules for the tax appeal tribunal. Now, the tax ombudsman. Now, this particular one is a new establishment. And they will be appointed by the president the head will be appointed by the president on the minister's recommendation. They will have one office per geopolitical zone. So what are their power? They are independent and impartial arbiters of taxpayer complaints, and they are a mediator between taxpayers and tax authorities. So their powers include investigating the taxpayer complaint, inspecting tax authority premises, making recommendations to authority, instituting legal proceedings on behalf of taxpayers, reporting arbitrary fiscal policies to the National Assembly, and issuing guidelines and directives. Basically, what they do is they are like, how will I put it? They are like activists when it comes to tax. So let's say, for instance, like I gave the example, you have an issue of this 3 million that they said you should come and pay tax on. And you are talking with your tax officer, and he's like, there's nothing they can do. You have to pay that tax by fire by force. What do? You will write to the tax ombudsman and tell them, this is my issue. This person is giving me an unreasonable tax. For instance, I think before the close of work in December, I went to one tax office and they were like, okay, this person, your tax is XXX. We have to raise the tax for 2025. That was the person tax. XXX was 2024 tax. And we believe you will always make more than you made last year. So therefore, we are adding more than 20% of the tax the person paid in 2024 to the assessment they want to raise in 2025. I was like, how are you sure this person even made more money in 2025? They said it's not possible. Every year we have to be increasing it. We believe we are making profit every year. And we're like, you've not even been to this our client's office. You don't even know how the business is operating. And truly, the business is not operating well as it operated the previous year. Then why are you giving us a 20% increase in tax for our client? So in case like that, you go to these people, they investigate your complaint. They go to the tax authority, and then they mediate between you, the taxpayer, and the tax authority to come to a reasonable resolution whereby it's comfortable for you as a taxpayer. Now, there's an extra power that is given to these people that makes it better and in favor of the citizens, whereby if the tax authority is doing things that is against this tax, the NTAA and the NTA, that's the Nigerian Tax Act and the Nigerian Tax Admin Act, they can report them directly to the National Assembly without going through. So that independence gives them the capacity to fight for the rights of the taxpayers, because it's not fair. Okay, so now what's the limitations of this particular organization? Number one is they don't interpret the tax law beyond the administrative issues, and they don't determine your tax liability. So they can't say, oh, why would they tell you to pay 10% of 3 million, which is 300,000? How would they tell you that you should pay 300,000? Your tax liability should be 150,000. No, they only mediate and come to a reasonable conclusion that is comfortable for both parties. And then they don't interfere in matters that is already before the court or tribunal. So if you've already written to the tribunal, they are not going to interfere. The power is already beyond them. They are to interfere when the case is not yet in any tribunal or court, and you have to settle things amicably. And when things are not being settled amicably, you can of course take it to the tribunal and start the process up to the point where you get the final judgment. And then their services are free for all because they are funded. Even they are funded from the um, appropriation bill. They are funded directly from the appropriation bill. So what's their complaint process? So firstly, you must try to resolve the issue with your tax agency for. And like I said, I mentioned earlier, it's one of the best things. Talk with your tax officer. Relate together. Why are you charging me this? This is the evidence saying I didn't make this amount. And then you come up. So you will see both the tax ombuds and the tax appeal tribunal, they are all talking about resolving this thing firstly with the agency. Now, when it is not resolved, then they must investigate this within 14 days, and within 30 days, they must conclude everything. That's their timeline. And then they will give recommendations to the tax authority. This is what we recommend from our investigation. And then if the authority ignores the recommendation, then they will report the matter directly to the National Assembly. Now, so there was no tax ombud institution before. Taxpayer protection was largely implicit. You have to do it all by yourself. And then there's no structured complaint resolution in the past. But now everything exists. So now, number 3 agenda for tonight is the Nigeria Revenue Service Act. So this act basically provides legal and institutional and regulation framework for the administration of taxes and revenue accruable to the government of the federation. That's either state. So this repeals the FRS Establishment Act. Now, it's of course is a legal body that can acquire, it can sue, and it can be sued. That's why you can take them to court and say, why are they charging you this tax, or they are not giving you a refund of one tax or the other, or they are not letting you use probably your withholding tax. They are not letting you use it to offset some of your taxes. Now, their function basically is to assess individuals, company, partnership, enterprises chargeable to tax. And then they are to collect, recover, enforce, and account for the taxes. They are to administer all federal revenues, not only traditional taxes, and then conduct investigation, audits, examination, and compliance enforcement. Then they are to quantify losses from tax fraud, evasion, and waivers. So there's something I didn't put in this slide, but I'll mention it now. There is a process under the FRS Establishment Act that was repealed, that I believe still exists now, which I want to talk about it when it comes to tax investigation and audit. Firstly, when you've been paying your tax probably for 1, 2, 3 years, there's what we call the DEX review. You will receive a letter from your tax from one of the tax authority that you are to remit to, saying, okay, we've reviewed this. These are our findings. You didn't pay the right tax. You provide them evidence. They close the whole case. DEX review is over. Once the DEX review is over, it goes to what we call the tax audit. So tax audit is done for a maximum of 6 years. So for instance, if you want to do a tax audit in this year, 2025, they can audit you from that's 2024, 2023, 2022, 2021, 2020, and 2019. So from 2019 to 2024, they can do a tax audit for you for a maximum of 6 years. So if they didn't audit you for 2018, they can't add it now. It is gone. Now, tax audit is more comprehensive. They collect almost all your documents, everything. They check it in total. They run it on the software they have to come up whether you've paid the appropriate taxes for those numbers of years. Now, once the tax audit clears you, nobody can open that particular year again, except in few cases, those years are gone. You've been audited, you've been deemed to have paid your tax appropriately, and that's the end. But if the tax audit says no, you didn't pay the right taxes, and then they raise an assessment and you're like, no, they are giving you a wrong assessment, then it goes to what we call tax investigation. Now, tax investigation, these ones, they have the power to arrest, to lock down your business, to arrest you, to take you to court straight. So they investigate and they also give their decision. And their decision is final, except if you now take it to the tax appeal tribunal. So the tax investigation also, once the tax investigation can clear you for any number of years, that number of years is closed forever. You've been cleared and been declared to have paid the appropriate tax. So let's continue with the slide. So these are basically their functions. And then they also issue your thing. They deploy digital platforms and technology. And this is one key thing. They are deploying a lot of technology. I believe those that work in large corporations would have heard about the e-invoicing, where instead of you having to prove that we made this number of sales, now you are now on the e-invoicing platform of the Nigerian Revenue Service, whereby you are running your sales directly from that invoicing app. So the government knows how much you're selling at every point. They know how much you're remitting. And also this technology, I think, is one of the main things that will reduce tax evasion. At the same time, it will reduce the pressure that is on taxpayers, the burden of proof, because the burden of proof is on the taxpayer to prove that actually I didn't make 10 million sales, I just made 5 million naira sales. So that's basically one of the main things why this technology is lovely. Now they can assist other states, the states, which is the state, the FCT, local government, the foreign government, in collecting taxes, and then they remit it to them directly, and then they can charge the cost of recovery. So this Nigerian Revenue Service is headed by the executive chairman, 6 executive directors from each geopolitical zone, 6 non-executive directors from each geopolitical zone, but those non-executive will be chosen by the president under the recommendation of the minister, and then ex-officio members will have representatives from the Minister of Finance, Ministry of National Planning, Ministry of Petroleum, Ministry of Justice, the CBN, the Customs, the CAC, and the Revenue, and the RAMFAC committee also. They will also have a representative in this board. But currently, because the NRS is the Nigerian Revenue Service is removing the FRS, all the current serving members of the FRS will be the governing board for the NRS. They will serve their term until their term is over. If chosen, they can be renewed. If not chosen, they might not be renewed. So they issue policy guidelines, they approve strategic plans, they appoint, of course, their staff, they approve remuneration, assign directors to executive directors, and then they make regulations with ministerial approval. Without the minister, they cannot. Without the Minister of Finance approval, they cannot make regulations. And then, so like I said, all their staffs of the FRS, they are moving straight. All the powers of FRS is moving. The leadership, they are moving. The asset and liabilities, it's moving directly. It's just like a change of name and a change of responsibility. And then every legal proceedings that the FRS is facing, it will continue under the NRS. So number 4 is the Nigerian Tax Administration Act. So this one is coming to be in January 1st. The first to have taken is already in place. The first half taken is already in place. So these ones are coming to be in January 1st. And what is the objective of this tax? Is to provide uniform procedure for consistency and if for consistent and efficient tax administration in Nigeria. So what are the key provisions of this? So number one is it unifies all the tax administration procedures across federal, state, and local taxes so that there will be minimal multiple tax laws. Then the NRS is giving exclusive jurisdiction over companies taxes, non-resident person taxes, company taxes, non-resident person taxes, armed forces and foreign service personnel, and then VAT, petroleum tax, stamp duty, development levies, and other federally administered taxes. Now, state tax authority, they have the jurisdiction over individuals. This is the same thing that existed before. Payee, for instance, payee personal income tax, they are paid to the state internal revenue service, while company tax, VAT, and the rest is paid to the federal government. So they can also delegate power to one another with approval, encouraging coordination and joint administration. So the states can say, help me to get this tax, I can't get it. And I think we talked about it in the NRS, where we're talking, okay, the Nigerian Revenue Service can collect tax on behalf of states and even foreign governments and then remit it to them after removing the cost of collecting that particular tax. Now, what's the objective of the framework? Now, taxpayers can object. So the objection framework under this tax says taxpayers can object within 30 days. So if there is any dispute, you can object to those disputes. Either they are issues or they are monetary issues, like the example that I gave earlier. So you can object within 30 days, like I mentioned earlier. Can you hear me now, please? Okay, thank you. So many of these tax authorities will start bringing out clarification, guidelines, and all those things for gray areas in the Nigerian Tax Act. And you can propose amendments. You can object to those amendments. You can object to those justifications. Now, your tax authority must respond within 90 days of you objecting to them. And if they don't respond, then your objection stands and is upheld. Now, in the case where the issue could not be resolved, like I mentioned earlier, you take it to the tax appeal tribunal, from there to the Federal High Court, from there to the Court of Appeal, and then the Supreme Court, which gives the final judgment. Any judgment from the Supreme Court is final. And it can come from either side, either the tax authority or you. So now, another thing under the NTA is the registration. It gives mandatory registration of all persons, including government and ministry, department, and agencies, MDAs. So every taxable person, a company, an individual, a partnership, a joint venture, a group, whatever, must register and obtain a tax ID. Now, non-residents must register if supplying goods and services to Nigeria, because they will be taxed on that particular service. Now, I think I wanted to talk on residency. Now, when we are talking about residency in taxation, residency in taxation differs based on country rules. But in Nigeria, you become a resident if you stay in Nigeria for a minimum of, I think, 183 or so days. More than, let's just put it, once you can stay 6 months and 1 day, you'll be taxed in Nigeria because you're a resident of Nigeria at that point. That is why they said those in diaspora will not be taxed, because you are already taxed abroad because you're a resident abroad. But because I move within countries, but once I can spend more than half a year in Nigeria, I am a resident in Nigeria and I will be taxed in Nigeria. Now, non-residents are those that spend less than that in a year. When it now comes to companies, resident companies are companies registered with the CAC in Nigeria. Why non-resident companies are companies that are not registered in Nigeria, or they don't have a registered office in the country. So let's say this Dangote deal of bringing in trucks with China, they are supplying goods and services to Nigeria. They have to register and they will be taxed on that goods and service that they are bringing in to the country. Mostly, the tax that will fall under it will be what we call the withholding tax. That's the WHT, the withholding tax. It's the tax that will most likely fall under the tax, because when Dangote wants to pay them, he had a contract of, let's say, 1,000 trucks at 1 billion naira for the 1,000 trucks. He has to withhold 10% of that money and remit it to the government. That's why non-residents have to register. And that will be the final tax on non-residents. They will take the money out freely of the country, and but their tax will only be 10%, which will be the withholding tax. That's why they have to register. Now, exceptions are passive income earners, investment only. They do not need to register, but must provide information. Those that are investing in Nigeria, they're just putting in their money. And then one person, one hiding. I think that's where the issue of NIN and CAC ID comes in, with the recent release by the JRB that by the FRS, that your NIN will be your tax ID, and your CAC number will be your tax ID as a company or business name or partnership or whatever. So because for instance now, if I have a Oyo State internal revenue tax ID, I have a Lagos State internal revenue tax ID based on wherever my income is coming from. But now everything will be unified, and that's one of the functions of the JRB. Now, tax ID is mandatory for bank, insurance, stockbroking, and government contracts. This particular line comes from where the Act mandates for banks to request for your um, tax ID, which is why they've been sending you messages. But the JRB have come out to say no bank will block your account number, especially since they already have your N9. Convert it to tax ID, and we are good to go. And then everybody can track one another. Now, filing of returns. We know that as company, you must do your self-assessment returns annually. Everyone does it now, and we'll still be doing it under the new tax law. So at the end of the year, you come up with your AFS, which is your audited financial statement. You input it on the FRS portal, which is the Tax Pro Max, and then it generates, you self-assess yourself. Okay, these are my cost of sales, these are my other incomes, these are my depreciation, capital allowances, and all those things, and then you are good to go, and you move to pay your tax, whatever tax that is given to you. So you must file within 6 months. So the deadline doesn't change. So if your accounting year is January to December, you must file latest June ending, or else you start paying penalties. If your accounting year is May to April, then you must file, I think that should be around October, latest, I think around October or November, October. You must file. So 6 months after the end of your own accounting year, you must file and pay your company income tax. And then for new companies, within 18 months of incorporation or 6 months after the first accounting period, whichever one is earlier. So within 18 months or 6 months, you file. Then if you are seasoned for business, also, if you are seasoned in January, you must file latest July. Okay, we've ceased operation. So we've come to tell you we've ceased operation. You do your filing, and then you must file your audited account also, except for small companies, which can now use attested statements of accounts. Now, for specific sectors, which is petroleum and gas, you must file 2 months after the accounting period begin. You must file your estimated returns 2 months after the accounting period begin, and then you must file your actual returns, which is what this company is filing. But for petroleum tax people, those in petroleum businesses, they must file 5 months after the accounting period ends. Then, of course, as usual, your VAT must be paid before the 21st of every month, whereas small businesses are exempted from charging VAT and filing VAT. If you are a small business and you charge VAT, you must remit that VAT, or else you'll be penalized. So for ease of business, because as a small business, I'm trying to grow my business, I now still want to be charging my customers 7.5% on whatever I'm selling to them. No. So they will be exempted on that. And then virtual assets now, they must file monthly returns. So that's why if you notice I think that was last year or so, where they banned crypto and all those things, and then they were telling them, okay, we want to open crypto back, but if you will operate in Nigeria, you have to open a company, you must have a registered address in Nigeria. So you must be registered with the CAC, have a registered address so that we can tax you and monitor transactions that relate to crypto when it comes to anything virtual assets, because it hasn't been regulated before. Now it's regulated, so they must file returns. Now, so now assessment and objection. I think we've gone through this before. And then payments of tax must be paid as at when due, on or before the filing day. You can file and pay later, but it's best you file and pay immediately before the payment is due, so that you don't incur penalty and then interest on whatever you're expected to remit to the government. So then your tax must be paid in the currency of the transaction. So if you are transacting in USD, you don't pay your tax in Naira, you pay your tax in USD. If you are transacting in Ghana cedis, you pay in Ghana cedis. If you are transacting in dollars, you pay in dollars. If you are transacting in Naira, you pay in Naira. Although on the Tax Pro Max, I know I can see USD, I can see euros, and I can see pounds. So I believe for other currencies, they are to be charged to the dollar, which is the global acceptable currency for exchange. So you pay it on the currency of the transaction. Now, when you are remitting for foreign currency, and not even just foreign currency, even for all taxes, if you are late, you pay a penalty of 10% of that tax amount, and then you will pay an interest rate per, some is per day, some is per month. You pay an interest rate per month specified by the Act, plus the CBN interest rate. That's why in tax, timing matters a whole lot. You have to be well timed to ensure that you don't incur unnecessary penalties to the amount you are meant to pay. For instance, I saw a client assessment in which, let's say, for example, the tax he is meant to pay was 100,000 naira. The penalty, 10,000 naira. The interest itself was more than 300,000 naira because of the person filed late. And that's why you have to pay the right tax also. Because when the FRS, which is now the NRS, or your state internal revenue service, come and do assessment, like I mentioned earlier, either the tax audit, the tax review, or the tax investigation, and they find out you defaulted. Let's say they are investigating you in 2026 now, and they're investigating you for 2020 to 2025, which is 6 years, maximum of 6 years. Now, they now found out in 2020 you paid 100,000 as your company income tax instead of 250,000. They will now tell you to come and pay that 150,000, which is your normal tax, with your penalty. Then they will now calculate the interest of all the years from 2020, 2021, 2022, 2023, 2024, 2025, and add it to it. Now, 150,000 can take you to close to 1 million naira in taxes if you don't file on time or pay what is right. Then tax clearance must be issued. You can get your certificate within 2 weeks of demand. So, for instance, for those that have been familiar with the Tax Pro Max, you can notice that you can get it directly from, I think, the tcc.taxpromax.com. I've forgotten, I'm not sure if that's the right That's the right site. But once you go there, you can get your tax clearance for the year of 2025. You can get it if you've done what you should do for the year. And then, of course, that means you are cleared for that particular. It doesn't mean you will not be audited later. It doesn't mean that you will not be investigated later. And then tax clearance, another thing is it is mandatory that you have these clearances when applying for trade license and other things. And then another thing is advance ruling. Taxpayer can ask for a ruling on the interpretation of the law. And then the service must issue a ruling or refusal within 21 days. That's if you have issues with them, the FRS must get you response. The FRS must get you response. And then the ruling is binding both on the service and the applicant. Oh, sorry. The ruling of the law tribunal, either the tribunal of Federal High Court or the appeal court or the Supreme Court. So the ruling is binding both on the service or the applicant. So if it's tribunal and the applicant or the service, either the state's internal revenue service or the NRS, if they are not okay with it, they can appeal. You as a can you hear me? Okay. Please, can you see what I'm presenting? Okay, I want to be started. Because I'm monitoring it here and I'm not hearing myself. So probably okay. So once the rule is binding on the service and the applicant, and anybody that is not comfortable, you can keep on appealing until you get to the Supreme Court, which is the final of finals. Then okay. So if you don't register, now I think I saw something on someone's status sometimes, and they said failure to register, they will charge you. Well, or no, I think the person said if you want to register, they will charge you 50,000 for registration. No, if you do not register for your tax ID, you will be charged 50,000 on the first month and 25,000 on subsequent month. This is basically effective on companies. Because as an individual, let's say it's not secondary, a university student who is not having any income, you are not even meant to file any returns or give self-assessment to the internal revenue because you are not an employed person. But when I start working, that's when I register with all the relevant states internal revenue service, and then I start remitting my taxes. But for companies, you are expected to register with the Nigerian Revenue Service, previously known as FRS, within 3 to 6 months of registration. So if you are registering your company this December, latest June, you must have gone to the FRS to register for tax ID and to be implemented on the Tax Pro Max. Anything after that June, first month, 50,000, and subsequent month, 25,000. Now, if you do not file your returns within the 6 months as stated, the first month is 100,000, subsequent month, 50,000. Now, if you are to deduct tax and you do not deduct tax, an example is withholding tax. If you are under contract, you are expected to deduct 10% withholding tax. If you are renting and you are renting from a company, the The building you want to rent is owned by a company. Then you are expected to deduct 10% of that rent value and remit it to the government as withholding tax. If you are renting from individual, I think individual should be 5,000 naira. So if you expect to deduct a tax and you do not deduct it, you pay 40% of the amount that you did not deduct as penalty. That is plus the amount. So let's say your rent is 1 million and you're renting from a company. You are expected to pay the company 900,000 and pay withholding tax of 100,000. If you don't do this, then the law now says you pay 100,000 plus 40,000, which is 40%, which is 140,000, is what you will pay. I don't know if you understand what I just said. Then, failure to use fiscalization is 200,000 plus 100% of the tax due. Someone said landlords don't listen. That's the point. That's why it's hard to deduct withholding tax. But for corporate, you can. They will certainly listen. The reason why corporates will listen is a withholding tax is not a tax burden. It's not even a loss to the company. The withholding tax is like paying a tax ahead of time. Whereas, when you pay the tax ahead of time, they can use it to come and offset the tax they will pay later, probably their company income tax at the end of the year. They can come and use it to offset it at the end of the year. So for corporate, you can always deduct. They will not argue with you. Corporates will not argue with you. Now, where there is no specified penalty, 1 million naira is the general penalty. Now, this is the main part of the tax law that relates with everybody. And I'm not sure I have everything here, but before I send the slides out, I will ensure I do a comprehensive explanation, add more slides to this particular one that I have here. So now, the Nigerian Tax Act is basically to unify the fiscal legislation governing taxation in Nigeria. And it applies to everybody in Nigeria, as an individual, a company, a trustee, incorporated trustee, whatever. It applies to every single person. Now, this particular tax act is the one that repealed a lot of taxes. I think around 11 taxes that was repealed: the CETA, the PITA, the petroleum, the VAT, the stamp duty. Everything has now been consolidated into one act, which is what we call the Nigerian Tax Act. Now, so these are basically the major acts that this legislation repeals. Now, what's the transitional provision? For all the assets that have been granted under capital allowance, number one, all the assets that have been granted allowances before January 1, the remaining allowance period will be adjusted based on the new act timeline minus the years that have already been claimed. I don't have the capital allowance percentage here. I don't have it here, but I will add it to it before I send it out. So what you'll be getting will be a very detailed and more comprehensive um, slide beyond beyond what beyond what I put here. Now, another thing is fully depreciated assets under the old tax law cannot claim new allowances, but they must retain a notional 1% value in the books. Another transitional provision here is companies that are currently enjoying pioneer status under the old Industrial Development Act, they will continue to enjoy the relief for the unexpired period. So pioneer status is basically for companies under some specific industries like tech and the likes. So they give them some pioneer status. For instance, if you are in agriculture now, you are exempted from paying any form of tax, even though you're a large company, for the first 3 years, extendable by 2 years. Yeah, I think so, 2 years. So you are exempted from paying tax if you are doing anything related to agriculture as a registered company. You're exempted. So all those specific industries is what falls under the pioneer status. You can also read it from the, I don't know if it was repealed or amended, but I think I should put it here. I'm coming. Okay, yeah, it was amended. The Nigerian Startup Act was amended, while the Industrial Development Act was repealed. See, if you are going into a startup, come and get this Nigerian Startup Act and read it. It gives you a lot of edge in the country, especially at five. Get go. The it's go. Sorry, I'm having issues with my connection on the one I'm using to particularly present. I believe you can hear me now. Okay. So I'm trying to get the presentation back, but I will continue. So small companies are 0% under the. Okay. Okay. You can hear me now, right? Can you see my presentation, please? Okay. So small companies under the previous tax act was 0%, while medium companies was 20% CIT, and large companies are 30% CIT. Now, for small companies, under the old tax law, your income must be less than 25 million and less. For medium company, your income must be 50 million and less. And for large company, your income must be 100 million and less. But under this new tax law, now small companies are to pay 0% as they've been paying, but their income has now been increased from 25% to now 100 million less. So what if you earn 100 million, if your income is 100 million and less under small company, you are now exempted from company income tax. So if your company doesn't make 100 million in income, not profit, income, but you will not be charged 30% of that 100 million. You will be charged 30% on your profit, not even your profit, on your accessible or taxable, on your taxable profit, not accessible profit, on your taxable profit. But if your income is 100 million, they believe you are not more a small company, you are now a large company, and you will pay 30%. And there is a provision to reduce it to 25%. That's in the hand of the Minister of Finance. They will bring out a regulation when they are ready to reduce it to 25%. But I'm not putting much hope for the first half of the year for that. Now, there is a global minimum tax. Now, this global, okay, someone asked what's the difference between accessible and taxable income. So accessible profit, let's say my income is 120 million. My cost of sales is 70 million. So I have 50 million left. My expenses is 45 million. Then I have 5 million as my profit. Now from my 5 million, which is my accessible profit. So accessible profit is 5 million. I will remove things like, what are they calling it? My capital allowances and other deductions. Once I remove my capital allowance and everything, let's say my capital allowance gives me 2 million. I have 3 million. My 3 million is my taxable profit. My taxable profit is what I'll pay 30% on, and then which will be now 100,000, and that will be my CIT. And as a small company, of course, small company, you have to file, even though you are not paying, you have to file. Okay, so let's continue. So global minimum tax now, this is for multinationals. Once your turnover is greater than or equals to 750 million pounds, is it pounds or I'm not sure if it's pounds or euro. I'm not versatile with this sign. Or if you are a domestic company and your turnover is greater than or equals to 50 billion, you must pay what they call a top-up tax of nothing less than 15%. What does this mean? This global minimum tax is not a Nigerian initiative. It is an initiative globally. whereby no extremely large company will pay less all over the world. Everybody must pay an effective tax rate of nothing less than 15%. Except in countries where they don't charge CIT. And we will see that mostly in the East and Middle Belt countries, all those Saudi Arabia and the likes. Although Saudi Arabia charges CIT, but not CIT on their resident companies. They charge it on companies owned by foreigners. So what does this mean? Let's say I made 53 billion in income. Income, not profit, income. And after everything, the whole tax I paid is not up to 15% of this 53 billion. I have to top up my tax to the point where I will pay a minimum of 15%. But if the tax I paid is more than 15% of 50 billion, then I'm not topping up anything. But if the tax I paid is less than 15% of my turnover, and turnover is the same thing as your sales, your income, depending on industry. If the tax I paid at the end of the year as CIT is less than 15% of my turnover, which is greater than or equals to 50 billion or 750 million, I think this should be euros, then I have to top it up to the point where I will pay 15%. So for instance, my turnover is 100 billion. At the end of the day, I paid 2 billion naira as tax, as my CIT tax. What do I have to do? Because Nigeria has subscribed to the global minimum tax, then I have to top up this my tax to be able to, by adding 13 billion naira, so that I will pay 15 billion naira as tax. That's just what the global minimum tax is about. For some countries, if it is a multinational country, but the residency is in another country, I'm not sure if this applies to Nigeria, but for some countries, let's say I paid that 2 billion naira as tax in that country, I will come and pay the rest to top it up in my country. But I think Nigeria, I'm not sure, but Nigeria collects all their own. For personal income tax, not even in this new tax law, in the previous tax law, I think that should be under the Finance Act. Finance Act brought a minimum wage earners are exempted entirely from the what are they calling it? From the tax, from personal income tax. Then they are exempted entirely. So this is not a new thing in the new tax law. Now, they said that in the tax law, the first 800 is exempted from, is 0%. It's not exempted, it's 0% tax. And please, we have to understand the difference between exemption and 0% tax. You are not exempted, you are just paying nothing. Now, the first 800 is exempted, is paying 0%. Now, if you're a minimum wage earner, 70,000. At the end of the year, you are earning 840. And please note, tax is calculated on your year income, your annual salary, not your monthly salary. So it's not that you now put it, oh, I'm earning 1.5 in a month. First 800 is exempted. The next 2.2 is 15%. No. That your 1.5, multiply it by 12, which should give you, I think, around 18 million yearly. That is what we will now bring into the tax schedule. I will do a live example here to show how it's calculated, and I will also send us the Excel sheets for those that might need it, probably those in the HR or finance field that might need it to calculate their salaries for next year and the likes. So if you are now saying as a minimum wage earner, and my yearly salary is 840, I am exempted from the first 800. So I have 40%, which will be taxed at 15%. The tax law now comes up with an exemption that if your salary is minimum wage below, you are exempted entirely. So even that 40,000, you will not pay 15% on it. Now, if you earn more than the minimum wage, you then have your first 800 exempted. Then the next sorry, I'm coming. Then your next 2.2 million will be exempted. And then it increases like that to a maximum of 25%. So the highest in the previous tax schedule was that should be 24%. So we see a 4% increase. So this one now goes from 0 to 15% to 18% to 21 to 23 and to 25, which is your first 800, your next 2.2, your next 9 million, your next 13 million, your next 25 million, and anything above 50 million. That is how you will be taxed. So you now have the access to claim relief. You can claim the relief of 20% of your rent up to a maximum of 500,000. What does this simply mean? If my rent is 1.5 million, I can claim 20% of it to a maximum of 500,000. Now, 20% of 1.5 million is 300,000. So I can get a rent relief of 300,000. If my rent is above 2.5 million, then I can claim 20%. I will only claim a maximum of 500,000 because 20% of 2.5 million is 500,000. So you can claim a rent relief. Other things you can claim is your pension is deducted, your NHIF for those in government institution, your National Housing Fund. Then also you will have interest on loan for owner occupied house. Let's say you own a house. Now, for those that are not renting, sorry, you cannot claim any relief. If you own your house, you now borrow money to, let's say, oh, I want to paint my house, I want to tile my house, anything you need for owner occupied house. The loan itself, you are not relieved from it. But the interest on that loan, so let's say you take a loan of 5 million to do something on your owner occupied house. That means you're already in the house. Probably you want to just make some restructuring and the likes. And the interest on that 5 million is, let's say, 15%, which should be around 750,000 naira. That 750,000 naira, you can be deducted as a deduction from your gross annual income. Another thing that is given as a deduction is your insurance premium. Your life insurance premium, to be specific, your life insurance premium, either for you and your spouse. Whatever amount you are paying for life insurance premium, you can deduct it from your gross annual salary or income to now get your taxable income. So I want to share my screen. I will show you an Excel sheet I have for the tax law, although I've not added some things to it. I've not added the interest on loan for owner occupied house. So I'm trying to open it. I will share my screen so you will see it, and we will go through Please, can you see the Excel sheet? Please, can we see the Excel sheet? Okay. Thank you. So now, this is the tax table already that has been edited into it. First 800, the next 2.2, the next 9 million, the next 13 million, the next 25 million, and then what? Above 50 million. And then we've already put in the deductions, the NHIS, the NHF, and your pension. Now note, pension is 8% from the employee, 10% from the employer. And your employer can pay the 18%. But the rule says every employer must remit at least 18%. If your employer likes you, they can say pay 5% instead of 8%, and I'll pay the remaining 13%. The employer can even say I will remit the whole 18%. And then the National Housing Fund, but this I think is basically relates to government workers, and NHI is basically relates to government workers. Your company's insurance doesn't apply. That deduction doesn't apply. It's only the NHIS, 5% of your basic. And note, when you are getting, probably you're an employee, you are bargaining for a job, these are the three basic things that matter: your BHT, your basic, your housing, and your transport. Because that's what determines your NHIS, your NHF, and your pension. you remit 8% of your BHT, and your employer pays 10% of your BHT. If your company is very generous, the rest are allowances, and they are all taxable. So now, let's do for, if let's say I earn 150,000, which is kind of an amount majority of people are earning. That means annually, I'm earning 1.8 million. Now, that is what they call my gross income, not taxable what? Income. So now, let's say my rent, we know how rent is, Lagos, very expensive. Let's say I found one very, very place cheap. 800,000 is my rent. Now, it has calculated it for us to see that 20% is 160,000, which is below 500,000. So 160,000 is our rent relief. Now, let's say I'm not paying NHIS, I'm not paying NHF, I don't have a life assurance, and then I don't have a loan because I'm already even getting rent. Why am I having a loan on owner-occupied house? But my pension is 8%, which is 144,000. Therefore, I have a total relief of how much? 304,000. Then I deduct it from my 1.8 million. Now I have my taxable income, which is 1.496 thousand. Now note, 8% is on your yearly income. That's your pension. Like I said, we are calculating everything on your annual income, not monthly. So now, this is my taxable income. The first 800,000 is 0%, so I'm not paying anything. Now, if we remove 800,000 from 1,496,000, we have 696,000. That means I will pay 15% on that, which means my tax for the year is 104,400, which means monthly I am paying 8,700. That means my effective tax rate is how much? 5%, 5.8%. Now, how much is my take home? I earn 150. My pension is 12,000, 8% of 150, 12,000 monthly. My tax is 87. I will take home 129,300. Now, I want us to do a comparison with the old one. I'm coming. I'll present it also. Please, can you see my screen now? Okay. So now this is the old tax law. Let's say my income is the same, 150,000. Income. Now, automatically in the previous one, you have what we call the consolidated relief. This is it. This means you are relieved from 20% of your BHT, basic housing transport, plus the greater of 1% of your sorry, you are relieved from 20% of your gross income, this 1.8, minus these ones, plus 1% of your gross income greater than, if it is greater than 200,000, or 20% of your gross income minus the pension, NHIS, NHF, plus 200,000 if 200,000 is greater than 1% of your gross income. I don't know if we get what I just explained. Let me try and see if I can put something here so you will understand it. So that CRF is equals to 20% of gross income minus those deductions plus 1% of gross income. So let's put this in brackets because you have to first remove the deductions from the gross income, then you do 20%. Plus 1% of your gross income, or 200,000. Which one is greater? So let's look at this now. 1% of 1.8 million is how much? That should be around, I think, 18,000 or so. Yeah, 10% is 180,000. 1% is 18,000. So that means we will choose the greater, which is what? 200,000. We will now add it to 20% of this gross income minus the total of these ones. That's what gives us this. Now we calculate our pension, we add it together, and then we deduct. Now, we now put it under the tax schedule. So the previous tax schedule was first 300, second 300, then the next 500, then the next 500 again, then the next 1.6 million, and the next and above 3.2 million. So that one is 7%, 10%, 19%, 21%, 24%. Now, even though this comes undeniably, the tax is still high because you'll be paying 133,712 per year. And those that are collecting it, they know we are all paying tax. So it's not that taxing us is just new. We've been paying tax. We will still pay it next year. But let's utilize it to our best. Now, per month, that means you'll be paying 11,000 and your tax rate is 7.43%. So what's your take home? 150, 12,000 deducted because they remove your pension. You deduct your PE, and then you take home 126,857. While here you take home 129,300. Even which I believe, even if you don't have rent, it should still be less. It should still be less. Can you see? Even if you don't have any relief, and there I removed pension. Yeah, I didn't remove pension. If you don't have any, if you don't, okay, sorry, I think it's the pension I changed though. You are still paying less if you have your pension there and you have no rent relief here. So this tax table is quite progressive. Now, based on my calculation, up to people, if you can get a total deduction of like 10%, for instance, pension already takes 8% of your BHT already. Whatever percent your rent relief is, let's say it's even 2%. If you have 10%, I think I have a document from the fiscal reform community personally that explains your tax. Even if you have 10% deduction, you will still pay less. Of which year now we're having close to more than 10%. I'm not sure. Because if your rent is 800,000, you'll be having more than 10% deductions from your gross income normally. Because your 10% should be 180,000. Here we are deducting 304 as your tax-free pay. Now, if 10% is your deduction, your total deduction, you will still pay less than you are paying now as long as you are earning 2.5 million and below. And that's almost 90% of all salary earners. Anybody earning above that will certainly pay above. So if I'm earning 2.5 million now, that's 30 million. Of course, my rent should be around 1.5 million. I'm taking 2.7, that's not even 3%. Let's put it as something that will give us 10% rather deduction. Let's put 2.9 as my deduction. My tax in the year is 5 million and I will pay 430 yearly. My take home will be 1.869. No. Yeah, my take home will be 1.869. Will be 1.869. Now, if we put it under the old law, 2.5 million, 16%, my take home will be 1.881. Oh, so you pay more. That means you pay more. This one is 16.75, this one is 17.21. Yeah, so you pay more from 2.5 million upward. But anybody below that, certainly you should pay less, and then it depends on other things you have, probably your NHIS, your life insurance. So if you have life insurance premium, immediately tell your HR to add it and have your evidence. Have your evidence of it, and then you get your deduction from your taxable income. So your taxable income is very little. So that's basically that. On the personal income tax. Now, for companies know that they pay a lot of taxes aside CIT. So when you get to the tax pro max, you get to the final stage, your CIT. So the tax pro max will help you calculate your CIT. They will add the TET fund, which is the education tax. They will add this NITDA for some specific companies. They will add the police fund for some. Yeah, police fund is even for everybody. They will add the police fund. So you have the EDT. You have the EDT. You have the under this. It's under this. Then we have other tax, the police trust fund, the NASENI. There's a lot. So if you're in tech or you're in petroleum related industry, you know that you pay NASENI levy every year. All those things now, they've scrapped everything and they've now turned everything to one, which means you are now paying 4% development levy instead of 0 point something, 0.0 something percent for police fund, education fund, all of them. Instead of paying all of them separately, they've now combined everything and made it 4% of your accessible profit. Now you are exempted as a small company and non-resident company. Now this fund, this development fund, will now be 50% will go to TED fund, 15% will go to the student loan, 8% will go to NITSDA, and 10% will go to defense. So I think they've even scrapped that police trust fund entirely. So instead of paying all those little funds, you now pay a total of 4% of your accessible profit as that. Now, there's a thing to note for companies. Companies, once you are a small company, you are exempted from charging VAT. So you are not expected to charge your customer 7.5% on your VATable items. So there are a lot of VAT exempt items, and they are zero rated VAT items. Zero rated VAT items are 0% VAT. It's not that you don't charge VAT, it is 0. For the rest, is 7.5%. And then there is VAT exempt. So VAT exempt is on things like food, agricultural produce, baby diapers, and the likes. Why zero VAT is on things like education, stationaries, books. Now, you now go to a restaurant. They now tell you restaurant is charging VAT on the bottled water you bought. Yes, they will charge you VAT because restaurant services are VATable. You can go to the street and buy that bottled water. When you go to a restaurant, they will charge you VAT and they will remit the VAT. So small companies are exempted entirely from collecting VAT. But the moment you hit 100 million, you register with the FRS or the NRS as a VATable company, and then you start charging 7.5% on VAT items. VAT items. Another thing, small company is exempted from deducting withholding tax. You are exempted from deducting withholding tax. But I think it caps at a particular amount. I'm not sure, but I'm not sure I saw it when I was reading it. But under the previous one, I knew that if you are doing a contract of 2.5 million, you charge withholding tax as a small company. But I believe it must have either been removed entirely or increased. So small companies are exempted from a lot of things. Then small companies are also exempted from development levy. Now, this is another thing you have to take note when it comes to company tax. Even as a personal income earner, before, there was what they call the minimum tax, whereby if your tax, if you are not meant to pay any tax, you will pay 1% of your gross income. But now, it has been scrapped. And I think it was scrapped from the Finance Act then, which exempted minimum wage earners. Same also, as a company, you are expected to pay a minimum tax of, I think it's either 0.5% or 1% of your sales income, your turnover. So let's say you made a loss. For instance, MTN declared last year that they made a loss of something millions. That they made loss, they will still pay that 1% company income tax. But now, under the new tax law, that minimum tax has been scrapped entirely. So if you make loss, you are not paying any tax, including this development levy. And that is why one of the goals of the reform was do not tax capital, tax profit for companies and income for individuals. Then we have specialized industries like the petroleum. So you have things that apply to the upstream operations. Their taxes vary. For instance, there is tax for those that have agreements with NNPC, sharing ratio. They have agreements. So they have their own particular types of tax. If you're in the petroleum industry, you can go and read the section that talks specifically on petroleum tax. Now, the VAT. VAT is 7.5%. It was 7.5% before. It is still 7.5% before. Before it was 5%, they increased it. But that was, I think, 2, 3, I've forgotten number of years ago. They've tried increased it, 7.5. We've been using it, and that's the same way it will be. So as a company, you are to self-account and remit all the tax that you charge, all the VAT tax you charge, you have to remit it. And then for large companies, there's mandatory use of electronic physical device for invoicing, which is the invoicing that I talked about earlier. You have to use the invoicing, e-invoicing for large companies. They've been bringing in many of them onto the platform, even down to small companies. They will bring you in. They will bring small companies in also as time goes by. So we hope to see that, because one of the main things is it will reduce the burden of proving your income. And one thing about those, the way it is just the general Nigerian thinking. General Nigerian thinking of nobody can remit the actual thing. Nobody wants to remit the actual thing. Nobody wants to remit the actual sales, of which is true. Some companies are not remitting, some are remitting. So what the e-invoicing does is, okay, be on our platform, remit, use our platform to do your invoices. You send your invoice through the e-invoicing platform, so automatically they have access to all your sales. At the same time, they have access to your purchases, because if you are buying from a company and the company send you an invoice, they have the detail of the company that is on the e-invoice. They have your detail on the e-invoice. So if you now come and you say, my cost of sales is 150 million, they will say, but we saw that this number of companies sent you invoice worth 1 billion and you settled it. How is your cost of sales 150 million? Of course, that means if your sales is not, if your cost of sales is 150 million, it's not 150 million rather, then your income also must be higher. So it brings about transparency so that they can catch everybody. That's just the goal. Government is always eager to, how will I put it? Government is always eager to collect their own money. They are not bothered about, they don't want you to run away with the money. Now, one of the main things you now have to understand is, with this new tax law, it limits a lot of people from paying a lot of taxes. Majority of companies have an income below, what are they calling it? Have an income below 100 million. So what does that mean? They are losing a lot of companies that are paying tax. So some of the medium companies that are paying tax, they are going to lose them because they were paying tax. Once you pass that 25 million range, you are already eligible to start paying some minor taxes. So what it does now is it reduces the income of a lot of people, of the government rather. It reduces the income of the government. So they are now trying to ensure everybody comply so that they will not lose the income, and then they'll be able to capture the informal sector, which is one very key thing. They need, because for me, having a tax is a benefit. And that's one of the issues with what they are with this issue of withholding tax. Because you can't withhold a tax from somebody that doesn't have a tax ID, we will not be able to claim it. Because withholding tax is not a burden. You are expected to go and claim back that your withholding tax from the government. So you're expected to go back to the government, tell the government, I need my withholding tax. I want to use it to supplement my CIT. So withholding tax is not actually a real tax. It's just a tax you pay ahead and you claim it later. For instance, we had a client had a backlog of withholding tax, and then they did tax audits. They gave a particular assessment, and they said, "Oh, you didn't pay this rightly. You didn't pay this rightly. You didn't pay that." And then we talked with the client. This is true. This part was filed wrongly for you. We have to settle it. And then we use the backlog of withholding tax to clear at least, I think, close to 70% of that tax liability that was given to us. And then the client only paid 30%. Of course, the client already suffered the withholding tax in the past, because instead of them to pay him 100%, they paid him 90%, and they withhold the tax, they paid it to the government. He used it later to come and claim to clear his CIT. So withholding tax differs on different things. I don't have the schedule here. This is my last slide. I don't have the schedule here. So I will add it to it. I will also add the VAT exempted items and the zero rated items. So then the withholding tax schedule, I will give it. So you see the percentage for individuals, for companies, and the likes. Now, the last thing I want to talk about is capital gain tax. Now, the capital gain tax has been repealed. We now have what we call tax on capital gain. And I know many people have seen that they were like, why? Why are they doing this? Well, this is the thought behind it. CIT is 30%. If I sell an asset, if I get an asset rather, that's why you see companies, they acquire asset at the end of the year and do all those things. If I acquire an asset, then I can claim capital allowance. I will also send the capital allowance schedule. For instance, if I get a building, if I finish a building, so I go to Lagos, VI, I acquire land, I do a building. This building cost me 1 billion. For the first year, I have a capital allowance of 50% of that building, which means when I get my assessable profit, I will remove my capital allowance, like I explained earlier. The rest will now be what will be my taxable profit, which I will now pay 30% on. So now, many people use it, they get cars, they get private jets, get all those assets. I now sell it after 2-3 years. Bought it 1 billion. I said it depreciated 10% yearly. So I sold it after 3 years, which means the book value now is 700 million. And I sold it for 1.2 billion. What happened? I've gained that much. I've gained a total of 500 million rather, because my asset have depreciated from 1 billion to 700 million. I sold it for, let's even say I sold it for 900 million. I gained 200 million. I will now pay a capital gain tax of 10% of that 100 million to the government. One way or the other, we know that we are reaping the government, because that capital allowance that was given have offset my profit that I should have paid 30% on. Now I'm paying how much? 10% on it. So what they did was, okay, we will increase capital gain tax. Sorry, we will remove capital gain tax. We will now call it tax on capital gain, in which we will now increase it from 10% to 30%, whereby small investment, shares and the likes below 150 million is exempted. If you sell any shares below one, which is even almost 98% of the country, if you sell shares of 150 million in a year, you will pay 30%. If you do not sell shares, you will not. If you sell below 150 million, you will not pay any tax on capital gain. Now, if you are now a large company, or sorry, not large company, if you are now doing shares investment assets above 150 million, you will pay 30%, except if you reinvest it back. So basically, what the tax on capital gain comes to do is to ensure investment continues in the country. Let's say, for instance, I have shares worth 200 million. I sell it in January. I can use the money to do something. December, I can invest the money back. Once I can invest it within that same year, I am exempted from tax on capital gain. So any shares or any investment sold that is above 150 million, if you can reinvest it within that year, you will gain exemption entirely also. So that is basically what the CGT is talking about. It's just to encourage reinvestment and people not selling their shares. So if I'm like how do I put it, like a stockbroker, and I trade my shares. As long as I'm trading that shares and I'm reinvesting it back into another company in Nigeria, I will be exempted from tax on my capital gain. That's just the way it is. And it doesn't matter how much you bought it. As long as you are selling 150 million above, you are expected to pay the tax on taxation on your capital gain. Another main thing that I think I forgot to mention is I think I mentioned it earlier. We are hoping and praying that the minister will bring out the regulations first, and it will also include the reduction of the corporate income tax, company income tax, from 30% to 25%. They are talking on reducing it from 30% to 35%, which we are hoping should come up fast because it will boost investment in the country. Companies will have more funds to do more. That's another thing. Another thing is, under this new tax, some items are now VAT exempt also. So equipment related to anything CNG, liquefied petroleum gas, or conversion kit, all those things, they've now also entered VAT exemption. But I think most of them will come into effect when the order from the minister comes up. So before I open the floor for question and answer, I will first take the question and answers in the QA room. So I'll take that first, and then I would also address some things I saw on the registration form, the questions some people feel. Miss Patience said, why 2.2 million, why not 1.2 million, for example? I don't understand the question, probably context. If it's I saw it when you asked it, I would have gotten. But you can give context. If you are still on the call, you can give context. In recent times, there has been hype from Mrs. Lillian Opara. There has been hype to register businesses. Many side also got business names. There's many of them don't yet have taxable income. How will they align with the new tax law? Okay, so yes, there's the hype of register. Well, register comes basically because of the issue of this tax law. Which one will pay me the most? And I basically think it depends on you. If you are a self-business and you make a lot of money, do calculation. If I am a company, I pay 30% of my profit. If I am a business name, business name, because if you are doing a business, not employed though, if you are employed, you have a tax ID. If you are doing a business, you have to register. What you now register as is what matters. Either you register as a business name or a company limited by shares. Now, if you register as a business name, you are paying PIT. If you register as a company, you are paying CIT. Now, PIT is the one I showed on the Excel, which also applies to employed people, which their own is stamped payee. For employed people, it is stamped payee. For people registered as business names, it's stamped PIT. So your profit from your business is what you put into that schedule. First 800, next one. If you think that your profit, you will pay more as business name than as company, switch to company. Number two is, if you make less than 100, even if you make 1 million naira profit as business name, you will pay PIT. But if you are a company, if you make less than 100 million naira income, not profit, income, you will not pay any tax. You will only pay tax on your employees. If you have employees, even as business name, you will pay tax on your employees, payee. You you pay tax on your employees. Do you get? And then you will and then you pay your personal income tax. If you are a company, you pay tax on your employees, but it is only the money that goes from the company to you, probably as owners, salary. You can call it salary and pay you also straight if you don't want to remove any money. When we are removing money from your company for one or two things and the likes, then you will pay personal income tax on that money only that went for your own personal use. So calculate your cost well and register the right one. Then someone asks, how is foreign income taxed? Is it converted to Naira first or taxed in the foreign currency? Foreign currency is taxed in, foreign currency is to be paid in the currency. So if it is any currency outside USD, euros, and pounds, convert to USD and pay in USD or Naira. So if it's Naira, pay in Naira. If it's USD, pay in USD. So you have to, I mentioned it earlier in the slide, you have to pay in the currency of transaction. You have to pay in the currency of transactions. So I've answered those questions. Now, payee is deducted monthly from employee salary, right? Yes, it's deducted monthly. If that's the case, what about freelancers? What do they do to manually pay their tax? Okay, so for freelancers, that's what we call self-assessment. So once you are registered with your you pay, please keep the money aside and pay at the end of the year. Payee is for employees. For freelancers, you pay personal income tax. And you remit your total income at the beginning of the year and all the costs associated to delivering that service. Not, I went to do oblate, I went to restaurant. If it's that you carried a client to restaurant to close the client, fine, you can put it as business cost. But please have evidence, collect receipt. See, even if you print, if you have a company and you print, collect receipt from that person. That's one of the issues we used to have. When evidence took, you see all these revenue service people, they don't have any options but to follow what you say. Because how will I show you all the receipts that tally with my financial statement and you're telling me I'm lying to you? They have to show evidence. So as a freelancer, keep records. Tell them your income, tell them the expenses incurred for the business, and then calculate your tax based on the tax schedule table and pay it. Will company be refunded if a mistake is made and you over-remit tax? Something like what the IRS does in the US. Well, so far, I don't know how they want to do it. I was saying that they want to even do VAT refund. It's part of the Tax Act, I think the tax NTA. And they said you have to bring in the technology, January, everything. I don't know how they want to do it, but currently, they don't refund. What you will do is you will write to the tax office. You need to offset any other. Whereas they should only pay consumption tax on Lagos and then VAT on Abuja. So they are paying VAT on Abuja and Lagos, paying consumption tax on Abuja and Lagos. So what we do is we write to the LRS, tell them this consumption tax we pay goes for Abuja and Lagos. This is the amount that belongs to Abuja. Help us, give us as credit for the next consumption tax we will pay. So you can write to them stating that you over-remitted tax, and then they'll give you your tax credit. Of course, I even believe the FRS, which is now the NRS, they have a good system in that area. You see the credit on your portal. Please, if you have any other question, drop it while I respond to the questions that I have here. I've gone through all the questions in the. Okay, I think I have some in the comments. Let me see if I can go through some of them. Okay, I think I answered the small company. Small company, you have to file. File with the CAC, file with the FRS, which is now NRS. File whatever you have to file with the state also. You have to file even though you are not paying. On taxable income tax, I want clarity. First, 800 will be taxed, and afterward, 2.2 will be taxed. Does this mean if I earn up to 350 per month, my income will not be taxed in January and February? No, 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 no. That's not what it means. So, I think we already did it in the tax schedule. We calculate your annual income, not monthly. Your annual income. So 350 times 12. So your 350 times 12 is 4.2 million yearly. Then we remove deduction, probably 8% of, let's say your total deduction at the end of the day is 10%, which is 420,000. You have 808,780,000 that is taxable. That's your taxable income. That is the one we will now do first 800, 0%. The next 2.2, 15%. And then the next one. And once we do that, we will now get your total tax for the year. We will now divide it to per month. And then that's what will be deducted. So it's not that you will not pay any tax in January and February. You will certainly pay tax. It's just that you have it's charged on the year. Do you get it? And if you have an increase of salary in the year, it doesn't mean anything. They will move your income to the new salary. It will also still tally at the end of the day. When you calculate it at the end of the year, it will tally. Now, if I have a business venture registered and my yearly profit is less than 25 million, will I pay tax? If it's registered as a business venture, which is business name, you will pay PIT. If you registered as a CIT and you don't have any employee, you're not paying any tax, you're not collecting VAT, you're not collecting you're not collecting withholding tax, you are not paying CIT. There might be other levies, so I don't know. But with the harmonization of tax, most of these levies should be removed. Then which Mr. Fred, payee is not an 18% deduction. No. It's pension. It's pension that should be paid 8% by the employee, 10% by the employer. Okay, for those that are not aware of WHT, I don't understand what you mean by aware. Is it that you've been paying, some people have been deducting your money for WHT, or you've not been paying it, or so? But if some people have been deducting your money for WHT, you are expected to give them your, what are they calling it? You're expected to give them your tax ID. So once they are filing WHT with the appropriate authority, your tax ID. The moment they input your tax ID and they file it finish and they pay for it finish, on your own portal, you will see it that somebody has paid WHT on your behalf. And then you will see the WHT credit also on the tax format. So, of course, if you've been paying it that way, you will certainly get all the, what are they calling? You will certainly get all the WHT credit. Even if you've not used it before, you can write to them that you want to use it for whatever payment you want to use it for. If you switch jobs or lose a job and you're being taxed for your personal previous income, which is probably higher, who do you report to? If you lost a job, nobody will pay tax on your behalf. Nobody will even charge you tax. The funny thing is, even this tax on capital gain, one of the actual additions is that if you lost your job and they give you what they call a severance pay, I think up to a maximum of 50 million, you are exempted. But if your severance pay is more than 50 million, you pay 30% capital gain tax. So if you lost your job, you're not getting any income. So who is paying payee? Nobody is paying payee for you because nobody is deducting it from your money. So nobody can what are you calling it? Nobody can deduct money from you if you don't have a job because you don't have an income. And for jobs, is your employees' right to deduct it, because if they do not deduct it, they will be fined. So it's your employee right to deduct. That's why when you see salary, you see your net income. And that's why most people negotiate net income and not gross income. Because the employer is meant to have removed it from scratch. So if you lost your job, then there's no income to tax. Then non-citizens income tax when they visit, and non-citizens tax when they visit Nigeria in any way. Yes, if you're a citizen, if that non-citizen came into Nigeria to make an income, it will be taxed on the income. Yes, it will be taxed on the income. But the tax might vary, it depends on the income. If it's a business deal, it might be a WHT tax. So if it's an employment stuff, it will be taxed, of course. You pay payee. But payee of expatriates are paid to FRS and not the state. Well, for the calculation of penalties, I am not, like I said, some are daily, some are monthly. I'm not sure of which one. Some are daily, some are monthly. Read the gazetted copy I sent. You will certainly see there. You can even put it into AI to extract the particular one you want. A small company is any company that is 100 million below, and I think it's 250 million naira below in assets. But mostly it's the income that matter. Once your income for the year is less than 100 million, you're still a small company. Yes, I'll share the video at the end of the session. It might not be tonight, it might be tomorrow morning, because I want to, I'm going to upload it on YouTube. I'll send the YouTube link. I'll send the slide copy. I want to finish the slide. I'm not done with the slide. There is still like 10 extra slides that I would add to this. These are almost 60 slides already. And we had like 10 extra slides to it. So, or more. Something that we shall ensure that you have all the knowledge that you have. Then you can message me via the email I dropped. You can also send me a LinkedIn share. You can also send me a WhatsApp message. Anyone, we can talk further from that. Okay, I have a individual tax ID. The business name certification comes with tax ID. Yes. How should I undo this? Yes, your personal tax ID is for you. Your business name tax ID is for your business name. Yes. So that's how you relate with them. When you relate with the FRS, you relate with your tax ID. When you relate with the state, you relate with your individual tax ID. So that's basically how it will be. Yes. So there's no issue with it. That's how it should be. It's not multiple IDs, but as an individual, for instance, I have 2 tax IDs, one from Lagos State, one from Oyo State. So that's where they are now doing harmonization of tax IDs. So let me see if there's any question here that I've not responded to that is in this question. Okay, I think somebody asked the questions on okay, do I have to register for TIN with the JTB? The state already issued one. No, JTB offers the same thing as they do. Okay. How does the controlled foreign corporation work? I have a difficult time trying to remember. How does it affect companies with pioneer status. I think I talked on the pioneer status already. So there are some people that have some exemptions that are cancelled now. For controlled foreign corporations, there is a if the company controlled foreign corporation means that it's a foreign company that is controlling it. This company can even give as an example, and we have Bessidorf. Bessidorf is the one that produces Nivea. Bessidorf is a German company. It's controlled by Germany. They just have a section here. We also have some of all these. Yeah, I'm trying to look for a perfect example. I don't know why none is coming. We should understand the company that is controlled foreignly but have a base in Nigeria. Yes, you pay for the income generated in your Nigerian company. So if the global company made 100 billion and from Nigeria alone they generated 2.5 billion, you will pay your tax on that profit generated from the country only. So that's how controlled foreign corporation worked. With the description we are told to be using, how can the FRS tell we are being truthful or not? How can they design if it were a business transaction or gift to a family member? I think this is one of the key things me and one of my brothers were talking about this evening. Well, they can't know, but they have what they call the best of judgment. You cannot have 20 different people sending you gifts every month. And they are the same people. How do you know them? They will bring investigation. So they have best of judgment, but when it comes to best of judgment is not actuality. You have to now have a rebuttal. That's where you say you converse with your tax officer, and that's why normally I would have just talked about the Nigerian Tax Act, but I had to go through the form so that we will understand other benefits that we have coming from the GRB to the NRS to the NTA and then to the Tax Act, which matters the most. So you talk with your tax officer, you relate, okay, I have evidence. It's not business. They are my family members. They love me so much. That's why they are giving me 1.5 million monthly. But let's hope you can be that truthful. So they are also, the government is also open on the truthfulness of the people. How does the tax law affect your application for international opportunities? Of course not. It doesn't affect your application. And then there's what we call the double taxation, which is one of the work of the GRB. If another country taxes you, you can't be taxed in Nigeria again. You will bring in the money as an income for free, but with the evidence that you've been taxed abroad. And then please keep your accounts, receipts. It matters. If you defend yourself, you need to have receipts. No, you have to have, if you have a registered business venture, you cannot use your individual thing for it. And thank God, the CAC has made it easy. The moment you register your company or business venture, once your company is approved, before you download your CAC certificate, where you will download it exactly, you can just click generate tax ID and to generate your tax ID. That tax ID, you take it to the FRS and you're good to go. Do I need to start adding VAT to my invoice for my customers? No. If you are a small company, no. Do not add VAT if you are a small company. If your income is less than 100 million, do not add VAT. But the moment you clock 100 million in your income, and that 100 million is not 100 million per transaction, is 100 million in a year. If you clock 100 million in August now, from September, you have to start charging VAT. And you have to register with the FRS that, yes, so I can now charge VAT. Even though with the way I'm seeing it, from the moment you go to register with the FRS, naturally, they will have given you a VAT form. What you just do at that point is you file your VAT monthly. you file your VAT monthly, but your VAT will be zero. You put your income and you put your VAT at zero because you are not charging any VAT. I want to understand in clear words the meaning of certain tax concepts related to the new reforms. If the person is online, you can type in the tax concepts you want to understand. Does this mean local businesses need to start using accounting software or even manual accounting? I would suggest that you use accounting system. It's best. It gives you an idea. It gives you a trail of audits and the likes. Sorry, can you see my screen? Okay. Please, can you see my screen? Okay. I think I've explained how everything affects SMEs. So you are basically free from majority of the thing. You just have to ensure that you file. Because of course, if you don't file, you will be penalized, even though you are not expected to pay anything. You'll be penalized. So I think there's a particular question in regards to, okay, if you are, what do you call it? Should I register a company if I'm a, yes, you can. If you feel, if you're a freelancer, if you feel your company can take jobs directly, if your company, you can, your type of freelancing, there are different types of freelancing. If you feel your type of freelancing, um, you can, you can use it to um, get jobs, the contracts you need. You can. So I opened a poll. Please, while we are, you can just go to the poll and you can vote in the poll. I know we've reduced a lot. I don't know why majority of people didn't join, but I we have currently we have like 198 registrations. So I believe they will get email for them to um, for them to be able to watch it later. So you can, and then I think somebody asked something about churches and the likes. Well, churches are not going to be taxed. They are incorporated trustees. So churches foundation, please kindly register your foundation rightly. I think I saw it on a senior colleague status that was saying they were charging CIT for a foundation. The foundation didn't register as incorporated trustee. They registered as a company. That's why they are charging them tax. So if you register as an incorporated trustee, although you have to file with, I think the CAC. I'm not sure about the FRS, but and you are also to pay payee if you have staffs that are earning income. So you have to register with relevant authorities also, but you are not expected to be taxed on whatever income or profit you make. Of course, as a foundation, the profit doesn't belong to you, it belongs to the organization. So churches, mosques, foundations, NGOs are exempted. So please let us comply. Let us take time. When we cannot read it, we can take time to use AI to summarize it. I've sent the 4 acts. I'll send it again. It's on the Google Drive. I'll send the link to the Google Drive. Also on the Google Drive, I will upload um, the slides. I will also upload other relevant documents, and I'll keep on updating the document as new regulations are coming out as we are expecting. I'll also be updating it, and I'll be sending emails to us from time to time. If very important regulations come out as signed by the minister, they are working with all the state internal revenue service currently. I think last week we were still speaking with the in one training we were doing with the with how we were still speaking with the Kano Internal Revenue Service chairman. So he said they are still working on it and they will bring out those regulations. As those regulations are coming out, we will most likely have another session before the first quarter, depending on the regulations that come out and how important they are for us to understand them and use them to our benefits. So thank you so much. We've spent 21 minutes more than the time. I want us to wrap up as soon as possible. I don't know if there's anybody that has a question, can they just raise up their hand and I'll go. But I think I saw one in the comments for a company registered as a business. How does the tax work? You pay PIT with your state government, and then you pay PAYE for any of your particular employees. So I think that's basically that. So, okay, I've opened the queue. So you can unmute and speak, Mr. I don't know if it's Mr. or Mrs. Ekene. Yeah,
Okay, good evening, everyone.
good
Thank you
evening.
so much, Simeon, for this very detailed training. Like, I have learned so much. I speak for a lot of people. At the same time, there are some clarifications I would like to make. Um, First off, you said you sent a link. You're going to be updating the Google Drive. Did you send a link? Sorry, for us to be able to get access to the information from the Google Drive? Is it sent to our emails or did you send it on the platform? Because I kept switching off and switching off. The audio kept, was unstable. So I don't know if it was sent before I joined in or something. That's my first. I have like 3 questions, but I just want to address, or should I ask all the questions at once and then you address it?
Yes, ask for your question.
Okay. Then the second question is for someone that works with the government and maybe owns a catering business by the side, for the person to properly register for the business with the hope of expanding into other businesses, what kind of registration should the person go for? Considering I heard you say something about someone having an organization and registered it as a company or something like that, to avoid such mistakes. Yeah. And the third question, I think I'll send it personally because it's quite personal. So I'll send it maybe via any of the other links you mentioned. Thank you.
Okay.
Hello, I'm done.
Oh, sorry, I was already speaking. I didn't know I was muted. So I sent an email, I think on Wednesday, to the first, I think 148 people that registered, which has the Google Drive link. I will send another one tomorrow morning latest when you get the slides and the rest. I'll send another one tomorrow morning latest. The email will contain everybody, and everybody will get access to the Google Drive link. You can download the gazetted copy of the tax law. And when the Presidential Reform Policy Committee, when they finish their reconciliation with the National Assembly and they update it, I'll send the updated copy also. So I will send that one as an email. I've sent it before. I don't know when you register. If you registered before Wednesday, you should have gotten it, because I know those that registered before, the first set of people, I didn't have any issues with their emails. But the people that registered after, then I had quite a number of people that put in wrong emails. Some people that their emails was not even delivering. I don't know why. So, but that one, you will certainly get the email with the recorded session, the slides, the gazetted tax acts for you to read better, and other necessary documents that you need. Now for registration. The registration, it depends on you, like I said. Um, in this place, I'm not in any want to give consultative service or professional advice, because it depends on many factors. And I will outline your options for you so you choose. If you have a catering business, you register it as a business name, you'll be liable to pay PIT on your profit, which is your income minus your cost of sales, which is your ingredient, delivery fees, all those things. If you have employees, you will pay payee on your employees, but that one is removed from your employees' salary if they are collecting more than the minimum wage, which means their salary is 70,001 upward. But if their salary is 70,000 below, you're not paying any payee on their behalf. So if you are a business name, you pay PIT to the government. And that is calculated using the tax bracket, the tax table that I sent earlier, the 0%, 15%, and the likes. If you register as a company, now, a company, you will pay payee also if you have employees collecting uh, beyond the um, minimum wage, which is 840,000 yearly. But if you don't have, you are also exempted. Another thing is, if your income is below 100 million, you're not expected to charge VAT, you're not expected to withhold tax, and then you're not expected to pay CIT and development levy. So calculate which one pays you, and then you choose the one that pays you the most, that saves you the cost. Because some people, they might say, oh, company, I'm not expected to pay anything, I'll go into company. And it's only the money I will remove from the company that I will pay tax PIT on. So some people go into company, and then later, once they hit the 100 million mark, they pay 30% on their profit, and then they are shocked. And some people, and another thing also, it depends on how you want to push your company or brand. If you feel a company gives you more credibility within your target market, then do it. If you feel a business name goes, then you are good to go also. There's none that doesn't collect contracts from government, but with a company, even when it comes to even government contracts, you have to just be able to show credibility and show that you have the capacity to do it. And of course, you will evaluate with many other companies. So it's how you want to present yourself that matters, and what vision you have that matters also. Another thing I would say is hasn't started yet. I think they are still doing some onboarding and some little things. You can also start considering this SME, especially for the SME people, this FRC SME. Go and study on the FRC SME Business Integrity Certificate. What they are trying to push, I was in their training last year, what they are trying to push is showing that even as a SME, I have credibility and I can deliver. So large companies can start dealing with you. Companies abroad can start dealing with you. For instance, it's going to be very hard for any UK company to come and deal in Nigeria. They will think twice. Because one of the laws of UK is if any of your supplier or so has any fraud case, and the fraud case is true, the CEO of the company in UK will go to jail. So let's say a company in the UK comes to deal with Nigeria, and then the Nigerian company has a fraud case, and they found them at fault. That UK CEO is going to jail straight away. So they are bringing such integrity certification to boost SMEs' ability to have access to funds and contracts. So just do everything possible. What I'm just trying to draw at is do everything possible to do what will boost the reputation of your business in front of your customers and also your suppliers. Does a VAT name change VAT? Does a business name charge VAT? Yes. If you are dealing in a vatable item, you have to charge VAT. But you are exempted from VAT. Basically exempts you from if you are below 100 million. It exempts you. So business name also charges VAT. But once you are within the range of what they call small company, you are exempted. So would that be all?
Yeah, thank you very much.
Sorry, I've been talking for quite some time now. So I said so I've been saying thank you so much for joining this session. Thank you so much for um, staying this long. Thank you for the questions. Thank you for the understanding. Thank you, everyone. I really appreciate it. I know we are going on with better understanding, and also we are also going on and seeing how we can utilize it to our advantage, because that's the main thing, utilizing this to our advantage. That's just the main thing. We have to see how we can turn this new tax into something beneficial for us, irrespective of how they are shouting up around the um, new tax law, oh, they're taxing us this and that, how we can use it to our benefit. And as I also have been saying when I was muted, is I pray God help the presidential tax reform policy, I mean, fiscal policy and tax reform committee to bring out policies on how our money will be spent appropriately. Because one of their objective also is to ensure our money is spent, that citizens will be able to say, yes, now I know why I am paying tax. And which is one of the major problems about this tax law. Why do you want to tax me? No good road, no light. For instance, I have to run this session on Gen. So no lights, no nothing. And you are taxing me. I'm paying tax every month, paying tax every year, paying hundreds of thousands, paying millions of nairas and everything. So all those things, we pray that our money is spent wisely. That's just the main thing. We also hope the president fulfills on his budget speech. We said that they will also focus on the implementation of the budget to ensure the budget is spent as it is expected to. So thank you so much. God bless us all. You'll get all the information you need. You will receive everything in your mails. For those that their mails are not working, that you know you did not get any mail, or you even know you will not get any mail within the next 48 hours and you did not get any mail, send a message to my WhatsApp number. Give me a mail that is working, and I will send you an email directly to ensure that you can get access to all relevant materials you will need. Thank you so much. God bless us all. Good night.
Thank you so much. Good night, everyone.
Good night, all.